What's good, YouTube? Welcome back to the Brown Gen. In today's video, we're going to talk about Zomedica, our favorite pet healthcare company. And if you've been watching the stock, which I'm sure you guys have, you've started to see it have a bit of a retracement. Now, what exactly is going on? We never know for sure, but I'm going to help try to get to the bottom of this. So before we get into the video, just remember, I'm not a financial advisor. You got to do your own research, use this video and sort of other videos or things that you read as multiple sources and then make your decision after the fact. So Zomedica, as a reminder, is a pet healthcare company with three verticals. They've got their diagnostic technology, they've got their revolutionary therapy to decrease pain, inflammation, anxiety, and then they have their PulseVet, which is like the leader in shockwave technology, focused really on horses. I never say I think it's equine or something properly. So today, Zomedica was down 4.67%, right? And people started seeing Zomedica do very well recently were probably a little confused. In fact, over the last 5 days, Zomedica was at 23 cents. If we take a look over the year, while Zomedica did have some high, we did see some low points. At the lowest, we were at 15 cents back in October, right? Now, one of the things we always have to do is put this in the frame of reference of everything else that's going on. So the NASDAQ is at all-time highs. The S&P 500 is now at all-time highs. Yet Zomedica is not coming anywhere close to the values that we saw back when this was the case for the rest of the stocks. Now, there's a couple reasons for that. And what I will always say is people still aren't fully comfortable with lots of stocks. Why? Because there are really 6 or 7 big companies, big tech companies. I'm sure you know them, right? Apple, Tesla, etc. They're really bringing up the rest of the market. Like Nvidia is one of them too. And that's the reason we've seen such a huge recovery in the index funds. The stocks are lagging behind slightly. That's not always going to be the case when risk on investing or risk on behavior comes about. This is where we expect to see a lot of the low cap stocks. So Zomedica has $200 million. That's a low cap stock in my opinion. Or small cap, sorry. So given all of that, what exactly is going on now in the last few days, number one? And number two, when can we expect to see more risk on behavior? Maybe I'll start with the second one first, but really it's as we start to see inflation come under control, we start to see the interest rates be pulled down, more free money, increased money supply, which means that the assets will see an inflation because they'll be priced into the sort of available monetary supply, which is why assets tend to go up when money is available and why assets tend to go down when money is no longer available, because every dollar is worth more, right? It's all relative. And you want to make sure when we get into the stock market, we're getting into the stock market to ensure that we hold on to our purchasing power, right? So while your money may devalue by like 6% a year, if you're able to make more than 6% a year in the stock market, you've beaten that. So you've been able to hold on to your purchasing power. Looking at Zomedica, the last update we've had was December 18th, right? As you remember, I made a video. You can check that out on the channel where I talked about the new market opportunity for their expansion in truforma. Really, they've made 3 new assays, which means they're going to have more potential revenue coming in from those specific assays being utilized on top of everything else. That being said, truforma is still not at the point where it's a no-brainer for many of these vets. So there is a customer appreciation program. They do have some truforma devices available at some clinics. And ideally, we start to see more proof of concept. And I used sort of the NES example last time. Really, the more games that were on the NES or the SNES, the more you wanted to buy it. Whereas if you can only do 1 or 2 tests or 1 or 2 games on a console, what's really the point? So they're expanding this out, which is obviously great news, great for sentiment. So then what's going on? What happened in the last few days that could be causing this sort of slow attrition, right? About 15% loss in value. Well, the first thing I'll say to you guys is Happy New Year is coming up, right? We got 2 more days, and then we've got our new year. We're in 2024. At the same time, that has some tax implications. So one of the things you've got to think about, and we cannot forget about, is tax loss harvesting. And people tend to take profits and sell off their losing investments at the end of the year to offset the capital gains that they've gotten. So like if you sold some stuff at a profit, you want to sell some stuff at a loss to offset any of the capital gains taxes, right? So this is basically meant to limit any short-term capital gains. That way you preserve the value of your portfolio. And many people are taking advantage of this. This is not by any means just related to Zomedica. You can see that across the board for many of our favorite stocks. In fact, I don't know if you can see it over here, but just take a look at the right side of this portfolio. You can see pretty much so many of these things are down. Like Mara, one of my favorite investments, which if you watch the channel, I did say buy it up between $5 and $10 about 4 months ago. It went to $30 and now it's at $23.50, right? And I'm buying the dip because I took profits. Well, it's down 16.44% today. CleanSpark, all of these things are down. Why? Not because they're bad, but because people want to tax loss harvest, right? So that's so important. How do you calculate your tax? So Mithelen, what I would say is you don't do it one by one. What you do is you take a look at what your book value was or how much you paid for something and how much it appreciated. So let's say you bought something for $100,000 and then, I don't know, 3 years later when you sell it, it's $200,000. Your capital gains is $100,000. The tax rate depends on where you live. In Canada, you pay capital gains, so Canada's where I live, you pay half the capital gains on 50% of the value. So in my situation, let's say I made from 100K to 200K and I realized it by selling that 100K, I would pay my marginal tax rate, which is 52%, on 50% of the asset. So it comes out to like 25 or 26% of the 100K, $26,000. So obviously, if you're doing that, but at the same time you lost $100,000 somewhere else, it's in your benefit to sell that out, take that loss, sell it out, pay zero taxes, and then if you wait 30 plus days and you could buy the asset again, and this is what you do to prevent wash trading. So by doing that, people are able to tax loss harvest and buy back in, hoping that the asset won't go up significantly in the period of time. And this is a strategy that a lot of people employ. And we see this happen at the end of the year because this is when people go, well, everyone's going to tax loss harvest. It's not a surprise. Take a look literally every day. This is what happens. So if you're on a brokerage, Mithelen, you can actually get them to do it for you. They create a report and it will tell you any sort of closed transactions, what your capital gains is. And then you can take a look and say, well, do I want to close any other positions to help offset this, right? Because there's no point juggling like some countries, and Canada is one of them. I believe the US is one of them. They max your capital loss. So let's say you lost 100,000. I think you can only claim like $5,000 of that against your taxes. If you're doing like as a net, right? So if 1 year you made 100,000, you're paying the tax on the full 100K capital gains, right? You do that formula I said. However, if you lost 100,000 1 year, I think some places have it limited. Maybe it's 5,000. So you wanted to couple this so that you're taking advantage of the fact that if you're down a lot in one, you want to at least sell something that's really profitable. If you don't think it's going to skyrocket that much more, to offset your tax load. So that's really the strategy. And like I said, I can make another video talking about this. Maybe I should have made this video on it maybe a week ago. But this will happen every year. Watch 2024. If I'm likely still going to be here on YouTube, hopefully, knock on wood, we will be having the same conversation and I'll make a video talking about that. Yeah, so you live in the UK, you need to check if you can carry over your capital losses. So I don't know if you can carry them over, but they're not realized until you close the transaction. So let's say you have, I don't know, $100,000 in stock X. It is now worth $10,000. So when you open up your brokerage, it's like $90,000 negative or 90,000 pounds. Until you close it, you haven't realized your capital loss. So you leave it open until a point in time where you can pair this with a capital gain, ideally. And that way you can claim back that capital loss. Otherwise, you're paying the capital gains tax on your gains and paying a very small amount on a significant loss, right? You're being paid back a small amount. You want to make sure they net out to neutral, okay? And Zomedica, just as a stock, because, we'll go back here, it went into my buy zone, as I mentioned, right? Guys, you can look back at the various videos I've made. I'm not drawing these in today. All of this has been here the whole time. It comes down below 19 cents. I bought some more Zomedica shares. We didn't quite get to my sell zone of 23.3 cents. I'm sure we'll get back to it eventually. Who cares? But this is the potential, and this is what I'm looking at. So I always have people in the comments respond, hey, I don't believe in buying Zomedica, I have too many, or I don't believe in selling, I think it's going to go to $3. Hey, if you can close your eyes and say, hey, I'm going to just buy this much and wait 5 years and not care, for sure, right? And I get it. I know a lot of people here want to make what we call FU money, right? Like just having money that you can actually do something with. Making a couple $100, a couple $1,000 may not do anything for most people, right? Or for some people. But for me, I have that FU money bag. It's sitting there. It has a bunch of Zomedica shares. But I also have my bag where I'm like, let me just make some money to make it worth my time, because there is an opportunity cost to parking your money in something. And that's the way I see it. You don't have to see it that way. That's just the way I look at it. And, it's not to say that yours is wrong and mine is right, or mine is right and mine is wrong and yours is right. It's not about that. Anyways, that's pretty much all I wanted to cover today. I hope you found value in the video. Let me know. Comment below. Tell me, got confused there. Comment below and let me know what you think. And if you got value out of the video, I would love it if you could like the video, share the video, and give me a subscribe. We're almost at 5,000 subscribers. And if I don't see you before before 2024, I hope you have a happy new year. And just a shout out to Sue Jackson, who says, thanks, bro. Really appreciate what you're doing here. Hey, I'm here for all of you. So remember, you can find me on Twitter. You can find me in the Discord. I do have an exciting announcement, more crypto related, to come very soon. But I think it's going to be really cool. And I want to build a sort of closer knit community. Anyways, with that being said, thank you all for watching, and I'll see you in the next video.